Good afternoon. Today's topic, or my topic today, is digital assets indices. So we maybe start with the setup first. So MV Index Solutions is an indexer based in Frankfurt. We are a subsidiary of VanEck Associates Corporation, an asset manager in the US with around $35 billion in assets under management. And for digital assets, we partnered with CryptoCompare to build some indices. So we were founded in 2011 and have around $13 billion in assets under management now, mainly in equity. And we started the digital assets business around 2 years ago when we built up the calculation systems with CryptoCompare. So maybe what's an index first? So our indices for digital assets are similar to equity indices that everybody knows, like the Euro Stoxx 50 or the S&P 500. So we try to build a passive virtual portfolio of several digital assets. And therefore we define some rules. And I want to discuss the features of these indices in this presentation, which are the reviews, pricing, liquidity, diversification, and all the maintenance that we have to do when we run the index. The three biggest indices we have are a 5-component index, a 10-component index, and a 25-component index. But there are some more, these are more or less the flagships we have. So maybe we start with the monthly index reviews. So to select the top digital assets, we use 2 criteria, and that's first the market capitalization, of course, and in addition, the liquidity. So we rank all the assets by liquidity, market capitalization, take the average rank, and then select the top components. We also have a buffer to reduce the turnover, so the portfolio doesn't have to be reshuffled completely. And afterwards, we apply our weighting schemes to the selected components. It's mainly market capitalization, but not to have one asset overweighted, which is usually Bitcoin. We apply certain caps. And for clients, we might also apply floors as they want. So let's maybe continue with the pricing methodology. So that's not our ownership, it's CryptoCompare, just seeing Quinn here. So to cover or to use good price for each coin, we use the CryptoCompare aggregate index for each coin, which means we weight the exchanges in the price by liquidity. So there is an additional penalty factor. So exchanges that are, for example, in a time zone that is closed by now get a lower weight than exchanges in a time zone that's now actively trading. So we kind of follow the sun. Investability, of course, the goal of each index is to underlie a certain product that might be exchange traded or not. And it's important that all constituents trade enough. So we simply use a criterion that defines each coin that trades above $1 million a day as eligible. So anything that's below the 1 million is excluded from the selection in the very beginning. As soon as we have selected the coins we want in the index, we apply the weighting scheme. I already mentioned that. So, of course, the less components are in an index, the higher the weight is for the bigger coins. So we use 35% maximum weight for our 5-component index, 30% for the 10-component index, and 20% for the 25-component index. So here is an example for the top 10 index. Bitcoin would have been around 65% end of May, but as per our weighting scheme, it's kept to around 30%. So these weights are not exactly the 30% at that point of time, because prices move, of course, and the weighting cap factors are only applied once a month. So this is more or less the same for our 25-component index. And yeah, there is a little graphic to show how weights are kept. So we see 4 coins have a lower weight in the index than they would have in an uncapped index, and all the rest goes up. Now we come to the maintenance part. Of course, forks are events that can happen. We've seen the Bitcoin Cash fork last November. And here's a short discussion how this can be treated in an index. As I said, an index is a virtual portfolio, and similar to dividends or spin-off, the portfolio would get the fork chain as well. So what we do is that we add the fork to the index, keep it in for 1 day, and afterwards we then delete the smallest coin in the index. This is not necessarily the fork coin. So for example, when Bitcoin Cash forked from Bitcoin 2 years ago, it was still one of the biggest, and in the 25-component index, of course, there's something very smaller. We would take that out, keep Bitcoin Cash, otherwise the next review would get Bitcoin Cash back in and delete the smallest coin there. So just to avoid the turnover, we don't delete the forked coin necessarily. So here is an example for the Bitcoin Cash fork last November when Bitcoin SV was spun off. So we have Bitcoin Cash on the 14th of November in the index. We add Bitcoin SV on the 15th. We keep it in the 16th, because with the close of the 15th, we can identify the smallest company in the index. We have a 1-day announcement period for the portfolio in which the portfolio manager can reshuffle. And then at the close of the 16th, we would take out the smallest coin and continue the index with the respective number of components it should have. So 1 day, the number of components is higher than it should be. Another event that can happen that doesn't directly affect the index is an ICO. So as I said, we usually review our index each month, and every coin that trades at least 30 days is eligible for the index. So in case of an IPO, we made an exception, and the ICO only needs 10 days of trading to be added. It's pretty simple. So yeah, and now there is a little overview about the indices we have. Most of them look very similar. Bitcoin is a larger component in all of them. You see the performance of the markets. Again, it's very similar. And here is a broader index with 100 coins, which is also not capped. So it's even closer to the Bitcoin performance because Bitcoin is so big. But we also calculate 3 sub-indices of this one, which is a large cap index, which is, of course, similar to the 10, 25, and 5-component index. But we also calculate a mid-cap index, which is coin 21 to 50 in the 100-component index. and a small cap index, which is the smallest 50 coins in the index. Yeah, that's more or less it. So I guess I have to show the disclaimer, so my legal department doesn't yell at me tomorrow, and that's it. Thank you very much.